growing countries, the striker of your team. So growing countries are countries that are not as developed as maybe USA, UK, or Europe, but this means they can grow much quicker. So every country grows at a different rate. And some countries get more developed than others. So these countries are, think of them like the BRICS. So Brazil, Russia, India, China, and South Africa. So all around the world, you can invest in these growing countries, and they have less innovation, less development than other countries. But on the flip side, it means they're much cheaper to invest. So these emerging markets are really great for the long term. So think of the BRICS, Brazil, Russia, India, China, South Africa. 10, 20 years ago, these countries were much less developed than they are today. And you as an investor can invest in these countries. And you can invest in other more emerging markets. You can actually invest in even other countries, like think of the African nations. There's going to be a huge amount of development happening in the African nations over the next 10, 20, 30 years' time. You can invest in other parts of Asia. Vietnam is another good example of a country that's growing very rapidly. They have a younger population, which means they're going to have more working population, which means they pay more taxes, which means more development into the area. They're going to be more, they're going to have irrigation, much improvement. Technology is going to be much better improvement. And healthcare is going to be improved as well. And this all leads to a better educated population, and it means their stock market is going to grow quicker. So these are the strikers of your team, the growing countries, the emerging markets. They are more risky, but with that risk equally comes greater rewards. And these are going to get you more goals in the long term. The growing countries, the emerging markets.